Good afternoon, and today is March 13, 2024, and it's a Wednesday, so the day after CPI data release, and we have a huge move up yesterday after the CPI data release, and today is Wednesday. It cut between, and next tomorrow we have a PPI. So today the market is kind of accumulation. That's for lack of the better word. Basically, it go into the range. So we are Wednesday, March 13, and this week is have a option expiration. Alright, that's the standard expiration for option and future, and then you have end of month and end of quarter, so very huge in March right there. And next week we have Apple and FOMC meeting right here, 19 and 20, and the CPI just released the day on Tuesday. So that's the brief on the economic calendar right there. Alright, now look at the chart for today. First look at our favorite 5 minutes, but look at the 5 minute where the regular trading hour only, not include the electronic, which is the pre-markets and after market. So okay, let's start from last Friday, right? Last Friday we have a ICT setup, very beautiful right there. You have a Judah swing from 9:30 to around 10, perfect right there. Judah swing is the manipulation and the distribution. So the huge distribution on Friday. On the Monday, we have a gap down. Look at that. And then we have a non-Judah swing down. And this also a ICT concept right there. Not ICT concept. We misspoke. It's ICT model. And let's review that model a little bit. So it's a one trade setup for life with this model. So basically on Friday, this is what we have on Friday. Either this model, the number one, or this model. So the Judah swing 9:30, yeah, so this model, trade New York PM patient yield runtime, no, that's not this model, then it's gonna be this model. Basically it trade New York IM, yeah, this model, but it flips. So this model is for long, right, reversal. But if we flip model, it will fit exactly on like on Friday. Let's take a look. So Friday right there, you see that we flip that model. Basically, the Judah swing take out the high, and it break out the range from PM session, which is start at 1:30 right there. So that is the model right here. You see that? So it take out But basically it break out the range of the previous day, higher and the low. Yeah, right here, exactly. But in this case, in this example, it break out a low, but for Friday it break out high. So we have perfect ICT model right there. And then it's distribution, manipulation and distribution. So, and on Monday we have another setup that fit into the ICT model. In this case, it's not a model 1, but it's a model right here. Model 2, which is you have a gap down, and then you have a U swing, 930 U swing, and then it start reversal. It's perfect right there. It's around 10. You see that 10 minutes liquidity sweep or U swing right there. Around 10, it start reverse. But you see that the move up right here is very toppy. So if we go long, we have to go long around here, this level, right, auto block like this retest, or we go long at 11:25 when it retests this error. I think this error is on a high time frame. So the trick key right there, because it's toppy, so it's not gonna be a low resistance liquidity run. It's very high resistance right there. So we have to stick through a lot of volatility right there. See through volatile moment. So stay strong in order to hit our target, and it target exactly the gap. Basically it fill the gap. So that's the target right there, fill the gap. Exactly in the model that ICT displayed right there. So it's fill the gap, and then it pull back. Yeah, you see that? Fill the gap and pull back. Exactly. It retests them. It can be up double bottom right there. So it's a beautiful setup. And then yesterday we kind of caught out of guard right here on Tuesday. We don't see that model in ICT, but we can build a new model right there. So basically we have a gap up, right? We have a gap up, break out the previous day PM, then at 9:30 it will U swing. The reason right here we don't see, but it's the CPI data release. So you have U swing right there to refill the gap, and after refill the gap is reversal. And in this case, it reversed like 5 minutes, not 5, but 15 minutes early. Normally the reverse is around 10, right? Or 10 or 10:55, something like that. Like this, the reversal, or 10, right there, around 10 is. But for yesterday, Tuesday, the reverse is happened very quick, very fast. Around, excuse me, the reverse is around 9:45 right there, just 15 minutes after the open. If we look at, look at big match right there. If we look in the where we have a pre-market data, then we can see more pattern right here. So around here, so it's reverse right around here. right here we have a failure gap, so rebalance, a balance range right there. It's a balance price range right there, but there's no retest to that. A little bit right here, we love to retest a little bit down here so we can go in, but it did not. So the lesson we learned that if the gap up and then it pull back to fill the gap, then what to do? Then we can go in and take the long trade, because this pull into the high time frame also. What if we're wrong? We're wrong, and we're wrong very fast, very quick right there. That's the whole idea. If 50%, right? But if we right, we make a lot of money right there. So that's the lesson for right there. So it's gap up, refill, and then reverse. Let's see if we have a screenshot for this setup that we do. Right here, that's the setup that we do yesterday. CPI gap up, UDI swing low to refill the gap, and reversal is around 10 minutes before 10. So either 10 minutes before 10 or 10 minutes after 10. So that should be also a time window we're looking for right there. But we on experience yesterday, we kind of nervous or kind of not have enough courage or experience to pull the trigger right here. It's very tough. I think it takes a lot of time for it to exercise and get over that, because we feel like we're gonna buy into a falling knife. That's the scary thing, right? We cannot pull trigger. But next time when we see the pull into the gap, fill the gap, and hit the high time frame resistance level or the liquidity pool, and we see this doji, then we're gonna put a buy stop right above, right at the open of this candle, and we get in right there. If we're wrong very fast. We only if we put right here and we wrong, look at that, 50 cents. But look at the gain we get. Let's say we get out around 11 right there. You still have $5 move. Wow, 1 to 10, explosive. So right there to take the trade, and the risk reward very high. So next time we do it, remember, tell our subconscious mind, tell ourselves that we can pull the trigger in this condition. When we watch in the real time, it looks scary, but we have to do it, because when we do it one time, next time we feel much easier to take the trade. But if we cannot do it, yeah, third time is always the hard time. The hard time to make from 0 to 1. But after we have 1, we can build 2, 10, 20, 200 right there. That's the whole idea. You know, practice make different, right? That's what we all do right now. All right, go to today. Today, bright. Oh, what did we do? We pull some kind of right here. So basically today, the whole time we see right there. So today we do have the UDA swing. Believe it or not, we do have UDA swing at 9:30 to 10. And another thing today, that we don't have any gap today. Look at that, we don't have any gap today. However, we do have if we have experience, we can short right here at 9:30. As soon as we see it break out this level, we can short them. This level, this is the point of interest right here, or breakout level. That's our term right here. Some people use this is, you know, all the level we mark. We call it breakout level. But we saw other people use other term like point of interest, like point of interest. It's okay. It's a different term, but the same. It carries the same idea right there. That's the level that we pay attention to see how to provide it. So we should short right here when breakout. When it's breakdown level, put a sell stop. Yeah, it breakdown level. It has swing exactly around 10 and it start reverse, go up, go up, go up. But as you see that the auto, yeah, we don't see it's here, but if we look at the pre-markets, we see a auto block right there, and we see it. It failed to close above it, so there's a huge resistance level around here, 517.20 right there. And look at here, it trapped all the sell side liquidity. Drop like start from 10, and then it's rip up the liquidity. We think it's about right here, 30 right there. So this is an order block set up to break to make this doubt move right now. Pay attention at the 30 minutes of an hour, between hour, there's a move right there. So that's right here, and it's just above this level to set up a short right there. Huge drop right here at 15.25. Let's look. So basically, we see, if we look at the Q theory. So Q1 is Monday. We accumulation, and then Q2, which is Tuesday, is manipulation, because the CPI release, so it's manipulation. And then we have Q4, now Q1, Q2, accumulation, manipulation, and we expect a distribution, but today it don't need distribution. It's kind of going to a accumulation mode right there. So let's see. We really want to see maybe this is a manipulation and a distribution, or it could be manipulation and then distribution. So we want to see. But today we see key level right here, and this level on high time frame got broke down. So that is a bearish signal right there. Look at the 1 hour time frame right here. So this is the level. See, this level is the point of interest right there, breakout level. See, follow up between them, and for last start from Tuesday, it broke out that level, but it not moving far away, and then it broke out again, broke out, and we just go just above level. Let's see. So tomorrow, if it broke out the level, then we can short them. If we short them, then the target gonna be this huge. We have 511 right there. You see, that level, 511, or this level. $511 at the key level. You see the pullback from CPI did test the level. So the two level, 512, 511, very important. 512.07 right there. So got carefully for this level. Tomorrow it will be breaking down. If it's going up, we don't know, because going up it will be all-time high. So we have no data point forever up there. But so far we see that this auto block is not breaking. You see this auto block, bearish auto block, and then you have huge failure gaps. All of these just retest this auto block. As soon as it break down this auto block, we see like today huge breakdown, but somehow the algo it went up. It's very crazy. So it's still in a short setup. Auto block on 1 hour time frame, failure gap and retest. Let's look at the weekly. So weekly we still haven't seen any sign of sell-off at all. You see, it will be very bearish if we go down to the level that we marked right there. I think, yeah, 11. If we break down to 11, it will come down to all the way this. So we have up close and the doji, and this candle basically still in this range. So this is set up a major move right there. Let's see. It may resist the efficiency right there on weekly candle. Alright, by the way, for today we take 2 long trade. We just watch mainly, try to take note. Alright, we go in right here. We go in right here. We see breakdown at around 10, which is exactly the time it's gonna reverse. So we anticipate it's gonna be, this is a manipulation. Yeah, let's watch at the other chart, the chart right here. The one with the basically right here. So we see this Q1, Q2, and we see this manipulation, and then this gonna be distribution. Distribution, what gonna happen next? It's gonna be reversal, or right here it come down to accumulation again. So right here, as soon as we see this rejection, we put a buy stop at the open of this candle, and it carried into the trade. Is that right? Yeah, carried to the trade, and we just target right here. Our target just right there, because we believe it's gonna retest this auto block. Sorry, not auto block, but a breaker, bearish breaker, because we see that break down the paragraph with a failure gap. So we have a breaker, failure gap, and it's gonna retest that. So we put our target just right there. Just a simple trade, very quick scalping trade, right? Scalping trade. Yeah, and let me see. Let's see. So a solar trade. Yeah, that's quick. We go in at 03. Is it candle at 03? Open. Yes, 03. Oh, we go a little bit. Oh yeah, 08 right there. So you see that the candle that on 08, we go put it right there, and we get can to the trade, and we put a top out right there and hit our. I'm sorry, it's target and hit exactly. So we got 33 cents right there. And the second one is around this Well, we thought that maybe this is manipulation and then it's gonna be a distribution. So that's how it is. So we watch carefully. We see the breakout level here. It create a auto block. Then it fell to move back to the level. It break down one more right here. You have a doji and then it break down. So it can be, this can be treated at a bullish auto block in this case. So basically we put a buy stop here at 40, 41 level right there. This is a breakout, 4 breakout. So basically we anticipate it's gonna be 4 breakout at that level. So we put a buy stop in and it carried to the trade. Our first initial target gonna be this level because you see that breakout level and this one breakout level, then it's gonna retest the level. And it retests right before we got 29 cents right there, 23 cents, and how much we reach? Just 1 to 2 ratio right there because we put right here with our stop loss just below this level. So we did 13 cents and we get 23 cents, less than 2 1 to ratio. But you know what? We get greedy because when we see the candle too huge, so we move our target up here and it never hit that. So we end up break even. We move our stop loss to break even and we get out of the trade. So that's too short right there. As soon as we get out of this trade, next time we have to flip ourselves. We have to go short because the thesis that this one gonna be a 4 breakout, it's gonna then the next candle have to follow up, but it did not follow up. It fell. See that it fell at this level, and then it break down to the level that we anticipate can be long. Then the next candle we have to go in and short them without any question at all. So that's a lesson for us. Basically, we have to flip ourselves, flip our mind. Because the market tells us different, then we have to switch. We cannot just hold on to our bias when the market tells us different. Right now, we fight very hard to do that right now because psychological, we're not yet there yet. So we have to do a practice. As soon as it's gonna make move. Because it's go into the last hour, it's gonna make a move. So if we wrong very fast, and if we right, we can catch a big move. And right here it show us how it's gonna move. See that it create right here breakout level for those who want to short right here. Short get stop out because go back up. But it go back up, but it respect this level, this resistance, and the second candle also respect that. So it tells us that it's gonna go down. This move is just put in a bearish order block right there for the smart money. So for the dumb money, they chase, right? Take on the way out. Exactly, that's where we are right now. We thought we were gonna chase, but right here, it pushed back, kicked all the people who chased around here out, and put their stop at the level out right there. And then the next candle is just below that level, and then next level is gonna touch into this auto block, and then boom, it sell up. So that's the huge lesson for us. When we are trying to go along and we see that it's unbalanced our long position, then we have to switch right away, go to short. Don't worry that it's gonna be go back up again, because the market is primed to make a move, because the whole 2-3 hour right here is just consolidation, and definitely gonna make the move up or down, right? But the thesis to go up already imbalanced when it's reject this level, breakout level like that, then it must be go down. As simple as that. don't make it more complicated and we overthinking. So yeah, so that's we got 2 trade, 1 profit, 2 hour, 1 hour, and then this one is break even. Yep. So that's it for today. We reached our 30-minute mark, and thank you for your time and interest. We always be grateful for the opportunity. We do what we love, then success can come to our way. Bye for now. Have a great evening.